Hi, Parker Elmer from Odyssey Advisors to talk about small business retirement plans and how you can design your plan to better target contributions and tax deductions for the key employees and the owners. As you are likely aware, Congress continues to raise marginal tax rates, added Medicare taxes, investment income taxes, and further has phased out deductions for those making above $200,000, also known as the PEAS phase out. Depending on your state, you could be in the 50% marginal tax bracket or even higher. So what can you do? First of all, what you want to look for here is above-the-line tax deductions. And what I mean by that is things that reduce your adjusted gross income. Because if you're doing that, you're not subject to any of the tax phase-outs. And so again, if you're saving 50 cents on the dollar or more, that's really what we're looking for here. So then the question is, okay, what type of plan works for you? Well, basically we have 401k plans, profit-sharing plans, cash balance plans. That's really going to depend on the demographics of your firm, the size of your firm, how much of a tax deduction you're looking for, and how much money you're looking to set aside. So with those things, what we call a new comparability feature, which is a 401k plan with a profit-sharing feature, we could get to $52,000 a year for the owners in a plan like that, above and beyond the $5,500 catch-up that we can do, so $57,500 a year. That sounds great. All right, well, what about a cash balance plan? We could probably save another $180 grand a year on top of that in a cash balance plan. Now that comes with minimum funding requirements. The 401k plan with the new comparability feature is very flexible. Certain years you have a great year, you put in 52 grand. Another year not as good, you don't put in anything. In the cash balance plan, you're going to be subject to minimum funding requirements. So in exchange for that very large tax deduction you get of 180 grand per person, at least on the owner side, and much limited amount for the employees, there's going to be a minimum requirement you're going to be subject to. So you're going to want to design the plan to meet both your current and expected future cash flow requirements. So with that all said, how do I do this? Basically, the short answer is you get yourself a census. You come to a firm like ours or one of our competitors, that's fine too. We can look at that census. We can determine what is the best plan design for you and review your existing plan. Your existing plan could be great. I have no idea. Our job is to kind of work with you, figure out what works. We don't want it to be one size fits all. It's not out of a box. We want to design a plan that works for you, your firm, and it get you a secure retirement, avoid taxes, and basically get you to a place you need to be. Keep your business solid, keep your retirement solid, and these assets are qualified plans, which therefore means they're not subject to creditors, they're not subject to bankruptcy, they provide great estate planning tools. It's really a way to design your future and secure things today. So with that said, again, I'm Parker Elmore from Odyssey Advisors. If we can help, give us a call.